Hi, you're tuning into AWANI Review with me, Cynthia. Joining me on the show today is the CEO of Lendlease Asia, Tony Lombardo. Welcome to the show, Tony.
Thank you.
Now, Lendlease is a major developer, construction and investment company operating in about 8 countries. And in Malaysia, they are involved in developing some of the iconic buildings in Kuala Lumpur, such as the Petronas Twin Towers and also the Bank Negara Sasana Kijang. And most recently, they are involved in the massive development of Exchange TRX right at the heart of Kuala Lumpur. So really excited to know the update of TRX. The last we spoke when you were on our show, it was right after the 14th January election, where TRX faced some uncertainties in terms of funding. But I think things are running pretty smoothly now. Can you share with us the latest on TRX?
Yeah, well, we've made some great progress. So firstly, government supported us with the funding back then, and the project's moved along. When you look at the construction schedule, we've completed 40% of the structure for the retail mall. We're into the leasing, and we've actually leased up and got final commitments, and under negotiations we've got 50% of the mall committed to. So at that point, where we're still 24 months away from completion, that's great progress. We're very excited with where TRX is going. And you've seen a lot of progress with TRX 106, the exchange complete. Even though we're not been involved, it's nice to see Buletin, one of the key components of the actual overall master scheme, complete that tower, because it's really starting to take shape. And you've got companies like HSBC, Prudential and Affenbank who are all moving in from an office. So I really think the government's vision to making TRX the new CBD hub of Kuala Lumpur is coming to life.
So there will be a residential component, retail, and also some an office.
Hotel office.
A hotel office. Can you share with us what does it entail in terms of the differentiator in your development compared to what we have around in Kuala Lumpur?
Well, I think when we look at any new development and to be involved with the lifestyle quarter, there were two aspects that we look at a city, and we looked at connectivity. And one of the great things about connectivity to this site, it's the only site where the MRT, the new MRT line, will get an exchange connection. So this is the interchange, and you'll be able to access the site through 68 stations across KL, which for us, that means this site is very well connected. From what we try to do, and we'll bring our international expertise to the fray, is we look at the best practices of what we deliver around products across retail, across office, across residential. So we will bring that to the KL marketplace. But at the same time, we've been working with customers here, understanding their wants, their needs, what really the market needs to have long term, and we'll factor that in. So we designed our product where we put the human, the person at being the centric key component for that development, and making sure it hopefully meets what they want. And hopefully the market will see a very different experience in a mall, which will be the next generation mall, we believe, because it's built in the 2020s.
The local property market is still looking quite soft. So I know you have, 24 months till completion, but what are your thoughts about where the property market is heading in Kuala Lumpur?
Yeah, firstly, we always, in any good city, we look at the demographics, right? And we look at overall GDP. So if we look at KL and the market itself, Malaysia's still running at 4 to 5% GDP growth, which is quite strong when you look at other cities around the world, and it's forecasted to remain in that sort of territory. When you look at the demographics, this is a growing city. The urbanisation effect, today about 75% of Malaysians live in an urban environment. That's forecast to get to 90% by 2050. So all those factors are playing well for the needs of property longer term. I think there has been a lot of supply that's coming to the market, so the market's absorbing that. When you look at the retail space for the last 3 years, retail sales have run at between 8 to 9%. So pretty solid performance across that retail segment. The new supply of what we're putting on the market, we believe will cater for the experience of the future and what people are expecting in terms of use. The biggest thing I think we have as a differentiator to this mixed use precinct, we've got a 10-acre park that to me is the heart of the project, because it's a community space for everyone to come and enjoy. And the retail will pop into the park, so the uses will get mixed up, and I do believe the product will be catered for the future. The office product we're creating will be a campus style office, and again, it will be akin to users and have a more productive type space. So we'll start to blur the uses around between what's a retail experience versus an office experience versus a home experience. But all of it will be in that one precinct. And I think that's the benefit from the government's plan here. There'll be 45,000 office workers who come to work in TRX when it's all complete. And so there'll be a number of people living here, and I think there'll be a number of stores to come and shop in.
Well, but if you look at around this 5-kilometer radius from TRX, you have quite a few major mixed development. For example, the Bukit Bintang City Centre, and you have the Merdeka 118, which also consists of hotels, office space. Where will it come from?
Well, I think if you look at the retail today, as I said to you, we're 50% leased and committed and under final negotiation, and that's 24 months away from the project completing. So there's already a key component of the market, which is very happy to move to this location. And we haven't even started talking to the food and beverage operators, because the food and beverage scene, we want to wait to start leasing to that particular market now, because we want to see what's the hot concepts and make sure we bring that to the lifestyle quarter. So we're looking at the trends and what's changing, and things are changing quite rapidly, and so it's making sure we hit that in the mark. I think our residents, because of this connectivity and the mixed use element, people are paying a premium. So if I give you an example, our Palabar development, which we've just completed in Singapore, we set a new bench price mark for Palabar, the region. It had achieved a $1,500 per square foot pricing, and we sold it at $1,900. When we started that project, the market was relatively flat, and it took 3 years to complete. So the market, 3 years on, has moved forward. I see the KL market, it won't stay depressed forever. I see the residential market correcting and moving forward in the right direction by 2023.
So you're feeling pretty confident about the property market?
I can never predict the future, but what I can say, I'm confident in the product we're delivering will meet the customer's needs, and hopefully the customers see some appreciation.
Okay, let's talk about the product then, because Lendlease is involved in some of the world's major urban regeneration project. And in your opinion, what does Kuala Lumpur need for it to be an attractive center for people to work and live? Because this is an international project. The idea is to position this as an international financial hub for Malaysia.
Yep. Well, when we bid on this project, it was back in 2013. And there are 9 tenderers who actually bid on the site. When we assessed the project, we looked at the overall master plan, and we compared it against Marina Bay Financial District. We looked at Canary Walk in London. We compared it against the Hong Kong Financial District. This district, when we look at the KL master plan, meets all the needs and competes with those on a very level playing field. So for us, that was the tick. The point I raised around connectivity and MRT connectivity, that is one of the key components you need. If you look at Canary Wharf, there's only one rail station that connects one rail line going through it. So for us, we looked at that and going, actually, that doesn't meet consumers' needs because it's harder to get to. Versus this, we believe the government had the plan with the new MRT lines that were coming into it. So they need to be developed. The second line doesn't complete till 2021. So there's a lot of things that are happening. There's a lot of infrastructure works that are changing this whole location. So if I fast forward to 2025, this is a very different place that people will finally see the products come to light. Groups like HSBC, as an international bank, would never move here unless they believed in what the government is doing. So it's got the backing of Prudential, HSBC, the big financial players globally, and then the local player being Affin Bank, who are supporting this. So I think this is, you're seeing the next future generation of property being developed here, the next future generation of infrastructure. People will start to see these benefits when it comes to life. It's very hard to see it today, but fast forward into 2025, I think Malaysians will be very proud of what they see.
Well, I'd like to go back to when Lendlease first looked at the viability of this project. What kind of shortfalls did you see for Kuala Lumpur as a city, and what did Lendlease think it could bring to bring something better to folks here?
Yeah, I think the key thing is when we looked at this site, we looked at how the infrastructure was connecting it. So this connectivity with rail and road, it's one of our key things that we look at. So when I look at our 21 urbanisation projects, 17 of them are connected by rail and have this key intrinsic property, so value that's there. So this site had that, and so that was a big tick to us. The infrastructure and the walkability and the sustainability principles were things we thought we could bring to the fray. You know, we pride ourselves in how we develop from a sustainability perspective. Our development in Barangaroo South, which is one of our key global landmarks in Sydney. You know, last year just achieved the first carbon neutral precinct to be developed of that scale. So we just got awarded that recognition. So we believe we could bring some of that. So when we develop this site, we'll be targeting to get to the GIB, you know, sustainability township rating. We want to be first in Malaysia, so we'll bring that to the government. So we'll bring some of those international best practices that we have been, you know, executing around the world. Hopefully we can help the market evolve with some of those principles.
And how much of work is involved in developing TRX in a sustainable way? If you can share with us some key features that we can expect.
Well, I just think of the scale, just to put it into context, this is one of the largest projects we're ever, size-wise, that Lendlease has been involved in. So it's the largest project that we've got on the books. It looks lower from a value point because it's just exchange rate, but the actual size and scale it's quite large. I mean, the sustainability bits is complicated because we are delivering a large park that's part of this. So when I talk about adding green, we're adding 10 acres of green park. It's been built on the roof. Now it's a feat in itself, because just to think through the design components and the infrastructure, that's taken a good 2 years to get that design right. So those challenges are some of the challenges that we've had to deal with and make sure that we're complying with the standards that Malaysia set. So that's been a real challenge.
Okay, and what about connectivity with the rest of Kuala Lumpur? Because where you're located right now, the TRX development, it is part of the Golden Triangle, but it's still somewhat, I think we've discussed just earlier before the show, that it's not as accessible by foot. Yeah, so what are you doing in that sense to connect the city?
I mean, that's not in our per se execution plans, but what we've done is, from our perspective, what we've tried to do is make sure the 17 acres we're in control of, the walkability is great. And so we want the customer experience from a walkability standpoint to be a great experience. What we understand from seeing the plans from government is they have those ambitions to really drive that connectivity and walkability. So I think that is being evolved, and I really do think government's going to execute on that. When I look at KL, and when I came into my role, it's just under 4 years ago now, I actually see that KL's really improved its walkability, just in terms of how I can see that the overall landscape in this, the paths and the things that weren't here and that have been improved. So I actually feel that KL is really moving that way, and I do feel that the TRX will set the new benchmark for how they drive things long term.
Let's talk about technology, because it's changed how we live and how we work. For example, the rise of co-working spaces, which will be a key element in your office space. How do you take these factors into consideration when building such a large-scale project?
Well, first, you know, Grab didn't exist 5 or 6 years ago. So you start to look at changes in people's habits and how they interact with property. So the way we've started to design drop-off points and meeting needs of customers in terms of how they access the place via car has really shifted. So a lot of thought's gone into just that connectivity from a design. The actual product itself, what we are doing is putting more apps and things into the way people can access the products itself. So the residential will have its own app that helps people access the precinct and able to book different facilities and the like and interact. The office buildings themselves will actually have apps to get in, so the need of having a card to swipe in, those days are gone, because to me you can do that all on a mobile device. The mall itself, we're looking again, putting apps and different things in place to just help the retailers interlink and connect up. So apps and the likes and technology are just helping people share those sort of things. How we use space is shifting. Definitely our office spaces we've put in Singapore recently, we added what we call C-Suites, which is a new product that we've created that is a shared office space environment. And you know, it's designed to have 10 different users, but there's 35% of the space is shared. So, you know, I think the market's now moving to be more accepting to sharing the real estate. You don't have to just have your own, and you can actually share it. And that drives productivity, but at the same time, it drives networking, it drives different collaborations with different organizations. So, and I think ultimately it helps the sustainability principles because you're using the space better.
Well, let's touch a bit on maintenance. Now, Lendlease is quite different in the sense that you not only develop, you own, and you will also operate the project. the maintenance is not a strong culture in Malaysia. I mean, let's talk about how what are your plans to ensure that TRX after it's all done, it's sustainable and it will remain attractive.
Well, the number one thing we worked pretty closely with the government here was to create a common estate agreement. And what I mean by common estate is all the owners are contributing to the maintenance of all the common areas. And so that was the first time a developer has entered into such agreement with a master developer in KL. And we thought that was extremely important that we did that because we wanted the funds long term for this site to be able to self-manage it and maintain it. So it was one of the things we insisted on with government that we put in place because we saw that that would be a benefit to really driving the maintenance of this site and keeping it at that standard what we expect. And that's something we do everywhere in the world. So it's great to be able to bring that core principle to KL, and hopefully more developers think like that and are able to really maintain. At the same time, because we develop, we construct it, and then we own and operate, we do make some investments in the buildings that others don't, because we see the long-term operational benefits. And so that's why we invest in the sustainability principles, because we are reducing the energy efficiency. So we're making calls up front in the development to invest more heavily in those key things because we can see an operating payback because we're going to be the long-term asset manager. And so if we can see a benefit and a sustainable benefit, we will make that investment up front in our development equation. And I think that's the philosophy we take, is to really drive those initial investments that set the legacy for the project. And I think that's what our customers now expect, and people are demanding these more sustainable buildings. I see that's the future.
All right, so apart from TRX in Malaysia, let's start with Malaysia first. What other projects are you keeping an eye on?
We're definitely in dialogue on another couple of projects at the moment with different developers that we may look to joint venture over time. So we're assessing the viability of those sites. Predominantly, we are focused in KL at the moment. And we've also got a joint venture that with Cynthia in Shah Alam. We're actually been redeveloping that mall and extending another mall that we are 50-50 owners with. Cynthia owns 50 and there's a fund that owns 50, which we manage. So that's currently under construction. That will finish in September this year in terms of the redevelopment of that site. So we're looking forward to getting that complete. In Asia, we've got bigger plans. Urbanisation is a key component to our strategy. So we are looking to secure another 2 to 3 large projects. So there's a number of projects that we're targeting, both in Singapore, Malaysia and Tokyo. And we've recently entered the data centre space. We set up a new data centre fund with a large sovereign wealth fund, and that's allowing us to invest in data centres across, again, Japan, China, Malaysia, Singapore and Australia. And we are on the lookout to develop those data centres as well.
I believe Lendlease is also involved in setting up retirement villages in China. That must be looking quite exciting because of the trend that we're going, aging population.
Yeah, no, we've been working on it, and we've started what we call is a site called Art Gardens in Shanghai, in Qingpu. We will launch sales on that site in April. So we're just really we're 12 months into the construction of that project. It's exciting because we're delivering 850 senior living units into that market. Lendlease is doing it 100% on our own, so it's the first time that we've developed.
No JV.
No JV. It's a 100% owned project for the group. So it's not one of our largest projects, but it's a very important project because it will set the tone of how we can develop and play in that marketplace. And one of the key things is when we entered that space is Lendlease is the #1 owner and operator in Australia, senior living. We're able to show government what we do, both with the product in terms of what we call the hardware, but also the service and the software that we've put in place. And I think government really had a level of trust that we would deliver on their expectations of what they wanted. And so, we're pretty excited because, in the next April, we'll hopefully do well in the sales, but then the first phase will aim to complete the first 300 by May, June the following year. So we'll start to receive residents.
Have you seen any interest in Malaysia in regards to setting up retirement villages, senior
People have
living?
talked about it, but what you do need is the government policy on a couple of fronts. Firstly, you need support around how you entitle the land. So that's occurred in China because the government firstly set up an overall policy around senior living, but they've actually entitled land for a specific use. So because there is extra investment that does go into building a senior living community in itself. So I think that Malaysia needs to start thinking through that. Malaysia's a very young population, but it will start to age, but I think that we just need to think about those key things that we need to put in place to support the industry. And I think government is looking at those things at the moment, but until there's a clear path, it's hard to enter the space. But our focus at the moment is in China because we're focused on Shanghai. There's 25 million people there. By 2025, there'll be 6.4 million, will be greater than 65. So the need for the product is very high, and government set the KPIs to deliver. So we're focused on trying to really get that product right for Asia in China.
All right. Now, when it comes to urbanization, you're often dealing with authorities, local councils, sometimes unhappy residents. How do you deal with challenges such as that, especially in the case of TRX when it was linked to 1MDB? How did you deal with it?
I think you've always got to be engaging with the community and talking about what the project's going to bring. And it's important to get the feedback and understanding the environment. And like every development, it's impacting a city. It impacts traffic, it impacts users' experience while it's being constructed. So it's constantly giving feedback to the community about the things we are doing. And at the same time, we've got to explain back what we bring into the community. I mean, to me, the park, this is the first time in 2 decades a park of this scale has been delivered back to the community. So 10.4 acres, I think it will be a great place for people, firstly Malaysians to enjoy, but international tourists to come to as a great site. So I think we keep explaining what are the things and the positive things we're doing. And it's trying to take that feedback and use it to adapt the design where you can.
Would you say that period where there were a lot of uncertainties, was it one of your toughest time in your career in the property development?
Look, there's always uncertainty because you always do have changes. I think the one thing I thought was done well when the government changed hands, they did a very fast and quick review. Of course, as developers, we're always looking at time. We're always assessing development IRRs and time hurdles. So it was done within a couple of months. I can tell you, in other countries around the world, we've had changes of governments and sometimes reviews have taken place and they've taken 8 to 9 months. So, on a relative basis, there was a level of uncertainty, but it was solved pretty quickly from our perspective.
All right. You have quite an interesting background in the sense that you started with, I think, KPMG,
Yep.
General Electric, and now with Lendlease. Did you always have an interest in construction, property development? How did you get into it?
I think it comes down to my parents. I remember very young would always go, buy property as your first investment, and being migrants who moved from
That's very
Italy
Asian of you then.
to Australia, that was ingrained very early on in me. And I think, with the opportunity presented to join Lendlease, and Lendlease is a very iconic company in Australia. I was fortunate enough to have 10 years at GE, which taught me a lot about international business, and I spent time working in the States. But I've always had this passion personally about property. Most of my investments are in property, and just to be able to join a property group, I jumped at the opportunity. And 13 years on now, I've really enjoyed the experience because you get to leave a tangible legacy behind. And I think you're starting to see the impacts of either positive things we can leave behind from a legacy standpoint. So I've really enjoyed that as being part of Lendlease.
So you were based in Australia for a while before moving to Singapore. In terms of doing business in Asia, what are your observations?
I think like every market has its different nuances, and I think that one of the key things I've learnt about Asia is relationships are quite important. And if you don't have those relationships, sometimes they can hurt the way you can do business. So you really got to invest those time to build that core relationship. I've learnt Asians are very astute buyers of property too. They know a lot of information, and coming to the market, I was so surprised at how well they were informed about everything going on, in particular around the residential space. So people are able to quote different developments at any point in time. So it's like a national sport, buying property. But also how Asians used property was very different to my Australian experience in using a mall. For instance, when malls operate in Australia from 9 till 6, coming to Asia, malls operate from 10 till 10 and if not later. And I started to realise the mall becomes the community hub. And those nuances only came evident once you live in a market. So I started to understand and appreciate how you had to approach property differently here compared to my background of what I was doing in
And
Australia.
how is that sense of community? How are you incorporating that in your retail space and TRX?
Well, I think it's trying to make sure you're designing community space that people get back. So it's not just about the retailer, it's actually giving space back to the public. So we spend a lot of time on what we call placemaking. And that's at the center of how we design a place. And that's really to get a sense of how will the community interact with all the assets, and have we given back some community stuff place for everyone to come and enjoy it, because it shouldn't just be about the residential purchaser or the retail tenant or the commercial tenant. It's got to be about the broader community and interacting with your development and feeling part of it. So, you know, a lot of our work, we call it the fourth asset, is the community and the placemaking, and that's the investment that we're making into that space long term. So for us, that's become the important bit to get that right, and I think that's the differentiator, I believe.
All right. And lastly, I'd like to know about your vision for Lendlease in Asia. What's looking exciting for the group?
Well, I think, you know, the important thing for us is we've been here in Malaysia for nearly 40 years. We've been in Singapore for 46. I want to see us develop more projects in this part of the world. So, you know, it's very important for me to secure the next 3 to 4 large scale projects. We recently set up Lendlease Global Commercial REIT out of Singapore. So that is going to be a key investment vehicle we use to hold a number of our core assets that we complete around the group. So that becomes a key component of our future direction around how we'll invest in this part of the world. I'm very excited. There's some other sectors being data centers and telecommunication towers. We are known for in Japan, we've done a lot of work for the likes of SoftBank and KDDI when it comes to telecommunication towers. So that whole data infrastructure or cloud infrastructure space is growing. And we're excited to be able to play in that environment. The final bit, Asia has 4 billion people. It's one of the biggest parts of the world and it's growing. And just seeing the rise of the consumer population, the need for property and infrastructure is actually quite high. And I know markets go through their different cycles, but if you look at the long-term perspective of Southeast Asia, it's got a lot of positive fundamentals behind it. So just being part of that growth journey and seeing what happens in the next decade, I'm pretty excited to be part of it.
Right. Just one final question. Lendlease as a group, well, revenue has been rising, but profit has been on a decline. Has that affected your strategy in Asia, or are you guys still very bullish in this part of the world?
No, we're very bullish. I mean, in terms of capital, when I got here, we had probably about $700 million of capital invested for Aussie dollars. I've been given an ability to invest 1.5 to 2 billion, and that hasn't changed. So we've been investing in a number of key projects, and we'll see that continually, grow. Lendlease has had a strategy to really grow our international presence, and that's really the last 3 or 4 years has meant growing Asia, growing Europe, and growing the Americas. So we definitely see Asia as a key component to the strategy, and so we are going to be here long term.
All right. Thank you so much, Tony, for your time. Thank you for talking to me.
Perfect. Thank you.